Hi, I'm Tim Tyler from Coldwell Banker Realty in Maplewood, New Jersey. And since we're about 48 hours past the tax deadline, thought maybe this week we would talk about taxes. So I brought in a good friend of mine, my tax accountant, Alison Cogan. Alison?
Hello.
So Alison is with MRA Advisory Group. And so why don't you tell us a little bit about MRA Advisory Group and what you offer?
Sure. MRA is a registered investment advisory firm, and we are financial planners and asset managers with fiduciary responsibility, which just means that we have to do what's in the best interest of the client. My role with the firm is in tax planning for clients to help them keep as much of their money as possible.
Which I'm quite happy that she does for me. So one question I get a lot is about the New Jersey exit tax and what it is and how much you should expect to pay.
Right. The exit tax is actually, it's not a separate tax. It's actually a prepayment of New Jersey income taxes. And it should really only affect someone who expects to pay taxes on the sale of their property and doesn't have any other property in New Jersey. So most homeowners will not be hit with the exit tax if the gain on their home is less than $500,000. So for example, if you and your spouse bought a house for $450,000 5 years ago, and now you want to move down south, you would need to be selling that property for over $950,000 before you'd need to worry about the exit tax. So, you know, most people won't have to worry. But if you do have to pay the tax, it's actually credited to your personal tax return. So you're not losing any of that money. Obviously, there are, as with anything in the tax laws, there are exceptions. So the more details you can provide the professional helping you with the house sale, the better.
Okay, well, that's good news, I think, for quite a lot of our people, although the way house prices have been going lately, a few more may be having to pay that than before, which may be a good thing to have, a good problem to have. So the other big impact of taxes on a sale is capital gains, which you kind of alluded to a little bit there. Can you explain what you expect with that?
Right. Capital gains taxes are created when you sell property, and a home does count. So the good news is that there are tax rules that limit the capital gains created on homes used as personal residences. So the basic rules are that you must live in the house for 2 out of the last 5 years, and you make a profit of less than $250,000 if you're single, or $500,000 if you're married. So the way that the profit or gain is calculated is by subtracting the basis in the house from the sales price. So the next question is, what's the basis? The basis is the purchase price of the house along with any improvements you made. And examples of improvements are a deck or a new roof or windows. Something like painting wouldn't count because that's a repair. So as long as you can show that you meet those qualifications, there's no tax on the sale of your house.
So you kind of alluded to there. So what you should have somewhere in your house is a nice folder with all the receipts from any kind of work like that you've done.
Yeah, kitchen remodel, all that kind of stuff.
So would that include things like a new stove?
Not the littler things that are considered repair or replacement, because those are expected to be in the house when you sell them. But if you did pavers in your driveway or something like that, that would count.
Okay, if I installed a hot tub?
Yes, that would count.
That would be good. Okay, well, that's good. Are there any other tax implications for the seller?
It really depends on their personal situation. Some of the taxes paid with the sale can be deductible, so you want to keep that HUD statement or the closing documents. And if you use the home for business or as a rental, or if it was a vacation house, then there's also some tax considerations.
Okay. Then, of course, for buyers, the big difference, especially for a first-time home buyer, is that they can take a deduction for property taxes and mortgage interest, correct?
Right. There are some limitations as usual. Actually, the federal government a few years ago, I think 4 years ago at this point, the federal government increased the standard deduction and limited the itemized deductions to allow more people to use the standard deduction. State taxes, which include the property taxes and the real estate taxes, are now limited to $10,000 a year, which in this part of the country is not hard to get to. Mortgage interest is tax deductible up to a loan limit of $750,000. So unless there are other deductions you can claim, using the standard deduction may save on taxes. New Jersey does allow up to $15,000 of property taxes to be deducted.
Which unfortunately in parts of the state, that's not hard to get to either.
Exactly.
Okay. And one last question. Can you say a little bit about the New Jersey mansion tax?
Yeah, the New Jersey mansion tax is actually a fee that's paid to the county on sale prices over $1 million. The seller is officially responsible for paying that fee, but it can be negotiated between the seller and the buyer. The fee is a flat 1%. So depending on the sales price, it can get pretty expensive.
And so basically, if I'm paying $999,999.99, no tax, 1 penny more tax.
$10,000 out of your pocket.
Okay, well, there we have it. Well, thank you for joining me today. Why don't you, if people have questions or want to contact you about MRA Advisory Group services, how would they do that?
Sure, it's ACOGAN at MRAtaxes.com. MRA Tax Services on the website. You should be able to find us.
Okay, well, and I'm Tim Tyler from Coldwell Banker Realty in Maplewood, New Jersey. You can give me a call or text at any time at 973-462-4079. I'd be happy to help you find or sell that home. Have a great day.
If you learned something from this video, do me a favor and click the like button below. And if you have any questions about anything we talked about in this video, or have ideas for new topics for us to talk about, put those in the comments. And finally, subscribe to the House Talk New Jersey YouTube channel so you get updated whenever we put new videos in here explaining how to buy and sell real estate in the state of New Jersey.